How's it going, everybody? Welcome to this episode of the Chart Breakdown. My name is Bobby, and we are going to be breaking down Celsius Holdings, the very, very popular energy drink and stock that was getting a lot of hype. But now there might be some questions about whether this is really, truly worth keeping on your watch list. So without further ado, let's get into it. All right, so as I always do, like talking about what the company does, really, really self-explanatory. If you go into most convenience stores, most gas stations, gyms, you will find a can of Celsius. They are really a lightly carbonated, caffeinated energy drink. And a lot of it is geared towards calorie burning, whether or not that is accurate or not. Still, very, very popular energy drink. You've probably seen people drinking them. If you haven't, I would start looking around you. And if you start paying attention, you'll probably notice a lot of people drinking these. So very, very popular energy drink, has been on my radar for a very long time. But the question is this really still worth keeping on your watch list? So let's jump into MarketSmith. All right, let's widen this up a little bit. All right, so on a composite rating, it's a 75 composite rating. This is probably the lowest I would consider. And the only time I do consider low composite ratings is for a company like this that I have real true conviction in the company. When I see something like this all over the place and everybody knows about it, I'm able to give it a little more leeway in some of these technicals because I have a little more faith in what the company's doing. But that does not negate price action in the chart. And we'll get into that. So EPS rating, 25%. If you look down here, this is just a company where look, you went negative over the last quarter. You can see there were 3 quarters prior to that of triple digit earnings. And there's just not really earnings stability. But here where I really see it is the sales. That's a company like this, especially with a newer product. I really like paying attention to the sales. And here you can see this is the first quarter in 5 quarters that they haven't had triple digit sales. So I think that's something that is definitely worth paying attention to. Funds. You can see a good increase in the amount of funds that are getting into the stock. So the big institutions are interested, which is a good positive sign. You can see the RS rating, a 96. We'll talk about the RS line when we get into the chart. And industry group, 63 out of 197 in the beverages non-alcoholic. So not the best, not the worst, kind of right in that middle of the pack, but definitely something to take note of. Let's jump over to a checklist, the William O'Neill checklist. We got a 67%. EPS is really what's killing it. Also, we just got 16% off of that high, 16% really from the pivot, which is giving you another fail there. So 6 out of 9. And then if we jump over to my checklist, 6 out of 13. And it's just everything that we kind of just talked about is where you're failing. You can see that all right on the screen. So jumping on and looking at the weekly chart, we had a first stage cup base. It was 13 weeks in length, 34% depth. You can see there was a period of time where it seemed like this was forming a perfect breakout. And this, again, was a stock that I've been watching for a long, long time. I've been watching this probably since 2021, 2022-ish timeframe. Then you saw the attempted breakout and then fail. But you could see the S&P market was pretty much following what the market was doing. Now, here's where the concern comes in. You can see it here, and you probably see it better on the weekly chart. As the market and the S&P started to turn around, this did not. And I think that's the concern a lot of investors and traders are having, is this was so high on a lot of people's watch lists because it was showing some relative strength, and it was a company a lot of people had buy-in in. And as the market seems to turn around, this seems to be lagging behind it. So I prefer to look at the daily chart, especially when doing these, just to get a little more breakdown. A couple of the concerns for me. You can see this big peak in red volume, highest volume since the base on the 18th. And that was a big down day. And this ripping through all the moving averages and stopping just below the 50-day. To me, not a great sign. You could see clearly over the past few weeks, that the RS line, even though the RS rating is a 96, looking at the RS line is going to give you a little bit more of a update as to what's happening currently. And currently, this stock's RS line is downtrending. Again, lining up what we're seeing the S&P and the NASDAQ starting to turn around, while this stock seems to be lagging. Where we're at right now, I think, look, disregarding what's happened in this space, how everybody had this, nice run up, you see some of the volume coming in and everything looked promising. From where we're at right now, I personally, as much conviction as I have in this company, think that there's a lot of other merchandise out there. And when a stock like this has downtrending RS and is below its 50-day simple moving average, for me, that's a no-go. Now, with that being said, I've seen time and time again where a stock like this is important to keep an eye on. It's important to keep on a watch list, because when it has a product like this that clearly a lot of people have a lot of interest in and the sales are increasing, that does not mean that this stock is going to plummet. It just means that right now is probably, in my opinion, based on probability and risk, this is not the best time to be going at a stock like this. This is a put on the watch list, keep a close eye on it. And when the chart cleans up, when the RS starts to look a little bit better, and maybe even the market shows a little bit more strength, then maybe this is a time for this type of company and this type of stock. But as of right now, this is a keep on my watch list, on my deep watch list, and be patient. It will present a time to buy at some point if it is the company that we all think it is. I just think right now there's a lot better stocks to be purchasing. And it's just not worth putting the risk in a stock like this. So look, this could change over the next couple of weeks, but that is where I stand. But that's all we got for this one. As always, questions, comments, concerns, drop them down in the comments. Also, in the description, we have our Discord channel. If you ever have questions about charts, what's going on in the market, great community, ton of good people. We actually have a top 10 finisher in the US Investing Championship in there. Maccabee Trader, great guy, puts a lot of great information in there. So definitely reach out to him in the Discord. He'll be happy to help you guys. Other than that, though, hey, if you enjoyed this, subscribe, turn on notifications. We do this every single week. We also have top right-hand corner. That is our rapid review, our breakdown of what's going on in the market and the industry groups. And then, if you like this, we also have another chart breakdown of Axon Enterprises. Look that down there. You can check that out. But that's all we got for this week. Appreciate everybody joining us, and see you again next week.